What's going on, everybody? This is
What's
axisALiVE
up?
here with Crypto Sloth. We're here this evening, morning, wherever you are in the world, on this recorded video to give you guys a quick little update on market making in the HEX ecosystem. So without further
Yep.
ado, I'm going to bring up the chart here, and we're going to go through a quick little snapshot of the liquidity pools and how those liquidity pools look on the chart. And then we're going to show off the interface of what it looks like when you're setting a position.
Yep. Glad to be here, man. Important topic.
Yeah, I know a lot of people on Twitter have been asking. I made this call to action on Twitter recently. Hey, we should be putting our liquidity out a little bit, closer to 7 to 20 cents, not have it behind us so that, you could make money selling HEX and you could also entice people to buy it at higher prices. So I know
Yep.
that got a lot of traction and I'm pretty excited about that. And so we wanted to help you guys kind of wrap your minds around that a little bit. We've had a lot of questions. So Slothman, what are we seeing here on this HEX chart? You can see the price in pink here on the
Yep.
line, but where are all these bars that are on the chart?
Yeah, man. So Hex USDC chart, and like you said, the line is the price of the coin, but that histogram that you're seeing is the liquidity setup of the USDC 0.3% pool. I'll explain what that means in a minute, but essentially, what that chart is showing you is the amount of tradable coins that exist on the market. So the larger the bands, the more coins there are. The smaller the bands, the less coins there are. And you see that price is in this range of relatively large candles or relatively large bars, meaning that there are a decent amount of coins being traded in this range. So because this is the HEX USDC pair, the chart is showing HEX and USDC being put together in a pool of liquidity for people to trade with. And that's the basics of what we're seeing right now.
Mm-hmm. So again, to last point here, this is basically a range that we're trading in, where the low side of the range is 5.8 cents and the high side of the range is 8.1 cents. And this is important because if you're going to want to sell your coins on market or buy coins on market, you're going to want to figure out where you want to set liquidity at. And you can see here that behind this 5.8 cent line, there's this gap where you can see effectively there's no coins between 5.4 cents and 5.8 cents. So the market is actually can't decide, where do we want to provide liquidity? Like obviously there's two types of thinking here, right? There's like the upper bound and there's the lower bound. The lower bound has a lot more liquidity sat in it, meaning there's a lot of users that want to trade this coin at a discount, whether they want to come in with a lot of economic energy or they want people to dump into their economic energy so they can make more trading fees and or accumulate more HEX at a cheaper price. Whereas you have the actual optimal trading range here where you have less liquidity, but it's a band where most of the trading activity has been playing out because the market sentiment is so bullish right now. And so you're seeing these shorter term guys move their liquidity farther and farther up each time the price comes up to test these higher bands.
Yeah. And so to speak on the tweet that you were talking about, why would we want people to move their liquidity higher? When you look at a V3 liquidity chart like this, everything above the price is HEX, only HEX, and everything below the price is just USDC. Excuse me. And the reason for that is because people are placing it at a higher price to potentially sell at, or they say, I want people to trade with my coins at this higher price. And putting it below the price means, hey, I want to buy the coins or have people trade with my USDC at a lower price. And so when you have the shorter bars on the graph, that means there's less money at that specific price. So price moves faster in both the upwards and downwards direction because you eat through that liquidity faster with smaller market orders. So $10,000 in the range that we're in would move price less than if we were above the 8.1 cents and in those bars that are about half as much as the ones that the white rectangle is right now.
Exactly.
Yeah. And so the reason why presumably we would want people to provide liquidity in the higher ranges above 8.1 cents, and why we've seen a lot of resistance at the 7.5 range is because there aren't a lot of HEX coins on the market available for large players to buy. They can't accumulate a significant enough number of coins without moving the price against themselves so drastically that they're just losing out on money every time they execute an order. And so by people providing liquidity at a higher price range, it provides the coins for people to buy into to allow the price go up. A lot of times we associate low liquidity with price go up because there's less supply. Like from a supply demand perspective, the general heuristic is that low supply, high demand equals price go up. However, if the supply is so low, there are no coins to actually buy, then no demand can actually enter the market. Implicit to the idea of buying is there's another person at the end selling. So if there's nobody to sell us coins between 8 and 10 cents, the price will never go to 10 cents because you can't push the liquidity up into that range because nobody wants to incur the slippage to get up there. And this is kind of generally why, we're looking for some kind of liquidity shift where people are moving their coins into higher ranges as a signal that price wants to move up. But until that happens, we're going to be sitting in this range and have the potential to go lower into those really thick liquidity bands until we get that higher liquidity.
So let's take this liquidity chart and flip it on its side now. And here you can see we're looking at that same yellow bars pattern now in white and flipped on its side. So where the price is in red, if the price moves to the right, price is going up. Price moves to the left, price is going down. So we need to know, okay, we have some HEX or we have some USDC. We either want to buy or we want to sell. And if we're going to do it, let's make some fees along the way. So as you can see, to the right of price, there's less coins available. There's less HEX for sale. To the left, there's a lot of USDC that's trying to effectively buy HEX, right?
Yep.
So now the question is, well, how do we set a position?
Mm-hmm. Yeah. So yeah, this is is this the Uniswap front end? Yeah, that's the Uniswap front end. And this is where you'd want to go to set a V3 position, a concentrated liquidity position. So you see those two blue bars on the histogram. Well, first, that histogram is the same one we've been looking at on the price chart and on the horizontal chart. This is just on the Uniswap UI, and then those bars represent the range your liquidity is in. Now, here's something interesting. Access, take the one on the left and move it to the right of where price currently is. Keep going. Yep. Now, if you notice, it changed. Before you could provide USDC liquidity, but now it says the market price is outside your specific price range, single side asset deposit only. So you're depositing HEX coins into the V3 liquidity pool. Specifically, I believe this is the 0.3% fee tier pool. And you're not earning fees at this time because the price is not within the range that you set. But because the price isn't in the range you set, you can provide 100% HEX on that side, wait for price to be bought into that range. Then you're going to be earning fees and trading your HEX into USD as people buy your coins and give you that USDC. And the same works in the opposite direction. So if you pull the bands completely to the left, you'll notice that the HEX thing will go away, and now you only have USDC. So this is called bid side liquidity, and then ask side liquidity, right? I always get the two mixed up, but it's buy side, sell side. So it's buy side liquidity.
Yep. When you're to the right, when price goes up on HEX, that's ask side because you're asking.
You're asking for a price.
You're asking.
You're asking for a price.
Mm-hmm. And then
you're asking for a price to sell, and then below you're putting a bid for a lower price. Yeah.
Mm-hmm. Mm-hmm. So if you wanted to play both sides of the trade, you might put one of these bars slightly below price and one of these bars slightly above price. That way you can split the difference and you could make money on either way and then pull the position later and still be sitting on some USDC and some HEX. If your goal is to sell HEX, right, you'd keep your bands out here. And I don't know if you want to go into depth on concentrated liquidity versus ranging it, or if we want to save that for later on, or...
Yeah. So, I'll give a brief overview of it. So first, let's talk about impermanent loss. And impermanent loss is the difference between the value of the coins that you have once the price moves within your range, as it's moving within your range, or outside of your range, versus what you would have had if you just held your coins. Now, when you're providing a liquidity position, what you're doing is allowing other people to trade with your coins. You're taking either side of the trade. So if somebody wants to buy HEX, you're giving them your HEX, they're giving you USDC. If someone wants to sell HEX, you're giving them USDC, and then they're giving you their HEX. Now, whenever coins are being bought, price is going up. Whenever coins are being sold, price is going down. So because you're always on the opposite side of the trade, you get the bad deal of the trade wherever the net momentum is. And so if price is going up and you go outside of those blue bars, you're 100% in USDC. So the difference between the amount of USDC you have and the price of HEX is relative to how much HEX you had before you started your position is your impermanent loss. But as Axis was saying, you can use that to your advantage if your plan was to sell in a certain range. So you wanted that USDC in the first place. You set it at the range you want to sell. You let it run through all your liquidity, pull it, and now you have the USDC coins that you wanted without hurting the market and doing market selling. And in fact, by providing a service to the market, which you're earning fees to do. And so let's see, where was I going with that? I think that answered the question, right?
Yeah, definitely. Yep.
Yeah.
You can
And
make these
so
bands as wide or as small as you want.
that's what it was.
If you want out quickly, you can squeeze these bands down really small. And if the price moves north of your bands, then you're sitting on USDC. You made a little bit of fees, and you can exit your LP position. Same thing is true to the downside. Yep.
Yep. And keep in mind, the tighter your bands are, the more of your coins are being used actively in market trading. So you're earning more of the fees. So say somebody provides a wide range with $100,000 and you provide a short range with $10,000. If price is trading within your range, you could actually be earning more fees for that given time than the $100,000 person. However, once you go out of range, you're completely in one coin and out of the other, and that other person with the wider range is earning fees at that given time. So there's a whole dynamic and strategy behind, are you looking to sell? Are you looking to buy? Are you looking to earn fees? Or are you trying to get some synergy between the two of those? So two of those, basically. Fees and buying, fees and selling. And that's a whole concept, whole topic to discuss
So
too.
if this is something that you guys want to know more about, Crypto Sloth and I are going to be hosting a crypto bootcamp in the market, specifically geared towards and focused on market making and DeFi, and specifically on the HEX contract and beyond. So that's something that interests you. Just keep your eyes peeled. We'll be announcing something in the not too distant future. It's going to be like a 3-day event where we'll just get together and we'll go through this. We'll calculate ROIs. We'll talk about sentiment analysis and strategies behind setting LP for a purpose. So if that's something that interests you, keep an eye peeled on Twitter. I'm sure it'll be out there, and I'll be mentioning it in my streams as well. So anything else you want to say before we wrap this one up?
It'll be like a complete crash course. If you know nothing, if you know nothing or you know a little bit, or you just want to sharpen your skills, you'll have a concentrated number of basically classes and walkthroughs on how to do all of this stuff efficiently with multiple scenarios. So if that's something you're interested in, keep your eyes peeled. I'm excited for it, man.
All right, man. I am too. I can't wait. All right, guys. With that, we're out. Peace.
Peace out.